Well, it was another all-time high close for the Australian market. So hi there everyone, welcome to the Traders Circle weekly market update. It is Tuesday the 5th of August 2025, and before I start, you do need to be aware that whatever I say is general advice only. The big news of the past week is probably the US jobs data. And that, is even perhaps bigger than all the tariff news. So we saw US unemployment on Friday, and there were far fewer jobs created than expected. In addition, we saw June and May jobs numbers revised significantly lower. 250,000 less jobs were created than expected over the past 3 months. That basically means that we've seen unemployment rise for 3 months straight. Does that suggest that these tariffs are starting to hurt the US economy? Perhaps the US economy isn't as strong as Trump is implying that it is. After this data came out, Trump fired the head of the Labor Statistics Bureau. Not a very attractive move from Trump, I would suggest. He'd rather basically, the market ignore what we see with our eyes and ears and instead just basically take the propaganda that we're fed. We initially saw US markets fall strongly following this terrible jobs data. It actually fell quite a lot on Friday after another fall on Thursday, and then it rebounded overnight in the Monday session. Now that rebound came on the back of the market predicting that we would see further US interest rate cuts. So now the market is pricing in a 90% probability that the Federal Reserve will cut in September. I think that probability is quite high, especially after many Fed members still are basically saying that they don't think we should cut just yet. They're worried about a resurgence in inflation, and indeed US inflation is remaining well above the target range. However, at the last Fed meeting, we did have 2 of the 11 Fed members basically dissent and suggest they were favoring rate cuts. And the market now believes that everyone's going to capitulate at the next meeting, or the majority will, and that we will see a rate cut in September. So that 90% probability is up from 60% before we saw the US jobs data on Friday. So it is basically a big revision suggesting that we will see further rate cuts from here. And that's why the market rebounded. In addition to that, about 2/3, or the market is pricing in a 2/3 probability of a rate cut at the subsequent meeting as well. So the market now pricing in a 66% chance of back-to-back rate cuts at the next 2 Fed meetings. That's basically why the market's rebounded so strongly on Monday. And to be honest, it's why US markets have been rising so much for so long, is that they're pricing in further Fed rate cuts. For our own market, the RBA is almost certainly going to cut rates at the August meeting next Tuesday. The market is pricing in pretty close to a 100% chance. Some people in the market are anticipating they're going to do a 50 basis point rate cut. They're going to cut twice at the one meeting. That was basically after they didn't cut at the last meeting, with everyone expecting them to cut. Market basically pricing in a certainty of the rate cut next time. They almost certainly will. Our own jobs data was absolutely atrocious. Our own economy is not going very well at all. Back into a per capita recession. Unemployment rising. Obviously, the plight of the average Australian from an economics perspective is probably getting worse and worse. So, the RBA almost certainly going to cut, in fact, guaranteed to cut at the next meeting next Tuesday. Finally, we're also entering a company earnings reporting season. That will really sort of kick off in earnest next week, but the first few major reports will occur over the next few days. I think the biggest this week are AMP and QBE, and then the really large names will report from next week onwards. I mentioned at the start that our market reached another all-time high close today at 87.70, and that is despite expectations for this earnings season being pretty low. Again, it's about the 3rd year of no earnings growth expected for the Australian market, despite our market continuing to set all-time high after all-time high. The dividend yield for our market is pretty atrocious at the moment for a market that historically has been dividend-based. And it's hard to see it ending in anything other than tears, to be honest. The Australian economy is not going well. Company earnings aren't faring particularly well. The only reason that our market keeps setting high after high is we're seeing, extreme levels of US government printed money. That won't go on forever. And then, on top of that, we've got the expectations of rate cuts. Rates can't be cut forever. History is littered with times of people basically saying, this time is going to be different, this time is going to be different. And it never was different. And so, to assume that now will be different is arrogant, short-sighted, I don't know. But it doesn't mean it's going to fall over just yet. It will fall over at some point, though. And I suspect we will see some volatility this earnings season with a bit of reality coming back to some of these stocks and their valuations. So let's have a quick look at the charts for this week, guys. This is the Australian market, and we can see that it closed at its highest ever level today. The XGO closed right on 87.70, up 1.2% from Monday's close. Really, we're in a fairly tight sideways range between 86.40 and 87.70. And we've basically tested the resistance and the support of this range a few times now, and each time it's held. That being said, the movements are definitely getting more volatile. So on Monday, we actually tested the support of the range, and obviously today we tested the resistance of the range. And when we do see things get a bit more volatile to either side, it often tells us that the range is going to break some point soon. That's basically what we're looking at. Support to the downside at 86.40, resistance to the upside 87.70. We've just tested both extremes of the range. Will we see a breakout in the coming sessions? That's a real possibility. If we break lower, if we break below 86.40, I suspect we'll come back towards the previous support at 85.50 roughly. And if we break 87.70, it's hard to say where we will head. Our market tends to like round numbers, 8800, 8850. Very, very hard to say. I suspect we'll see a bit of short covering, a bit of rearrangement, and that could lead to a strong breakout day. And then I suspect the close on the breakout day will be our new resistance level. If we have a quick look at the US market for this week, and this is the US S&P 500, we can see they broke their uptrend line. I mentioned their selling started on Thursday, and then they had the big drop on Friday night with the jobs data. However, with the interest rate cuts expected, they rebounded overnight, and so they held some potential support at 62.20 and jumped overnight. Technically, they look bullish back to the all-time high resistance at roughly 6,400. Now, they have obviously broken this uptrend line. However, the market is still uptrending. It's still got the higher peaks and troughs. We'd need to see a break below 62.20 or a peak lower than 6,400 for us to say it's no longer in the medium-term uptrend. Technically, though, it does look like they'll go back to at least 6,400, and that might be a bullish driver for our own market to break above our own all-time high resistance. So I will wrap it up there for this week, guys. We've got the markets hopeful of rate cuts, worried about the economy, and we've also got Australian company earnings about to hit. So if you guys liked, please click the like button, click the subscribe button, and we'll see you guys next time.